Hello everyone and welcome back to another episode of What's Going On in the Real Estate Market. So the Feds, they are shifting tactics, which is a very good thing, but how does that really affect you as a buyer or a seller or as an investor? Also, we're going to do a deep dive into foreclosures and answer those burning questions of where they're at and when they're going to hit. Also, we're going to look at what's going on in the real estate market on a national level, but especially right here in Southeast Wisconsin. So let's dive in. So the biggest news is that the Federal Reserve decided to hold the federal fund rate where it is rather than hiking it yet again. So what does that mean for you? That means that the 30-year mortgage rate as of this month is now sitting around 7.19%. That's a bit high, but it's not the highest we've seen in our history. Now, why did the Federal Reserve decide to hold interest rates? Well, inflation is slowly but steadily declining, and the labor market is cooling off, yet it's still strong. Moreover, companies have learned after the pandemic, it's probably not a good idea to do massive layoffs because that breeds distrust and disloyalty. So now they're looking to cut costs in other ways rather than on personnel. Way to go, companies, for learning from your mistakes and taking care of your people. What a novel concept. Let's dive into foreclosure. So let's take a look at these two graphs from CoreLogic. Now, one of them is from May, the next is from June. That's all they have out right now. They haven't posted their latest update. But what do you notice? Well, the biggest thing is really there's no change. If you look at the bottom far right of both tables, the foreclosures are steadily holding at 0.3%. These are all-time record lows, and they haven't changed that way. There's a bit of a shift in the 30-day or more past dues, but nothing statistically significant at this point. What does this tell us? That really, in a nutshell, there's very low foreclosures, and that is not rapidly changing anytime soon. This is a really great graph from Atom Data. What it does show is the decline in foreclosure activity by state between January and June of 2003. If you look at Wisconsin specifically, we're actually down in our foreclosure activity by 4.41%. That's really good. Way to go, Wisconsin. This is another really interesting graph from CoreLogic. This is the mortgage loan to value ratio, meaning how much of a loan do you have as compared to how much the property is worth. So for example, if you have a conventional loan, 20% down, then you have an 80% loan to value ratio. And as you can see, the majority of people across the entire nation have a mortgage loan to value ratio of about 50 to 54%. That's amazing. That's a lot of equity across the United States. That's why we have so many cash buyers, or contributes to why. And as you see, as we go up the loan to value ratio, i.e. the more debt you have against your home, the number of people who have that actually decreases. The people that are completely underwater, it's such a small amount as compared to the United States, which is why, again, that foreclosure crisis is not coming anytime soon. And the people who are having those hardships, it's really not the same reasons, such as the subprime lending that was going on in 2008. It's just really normal people going through a tough time. For example, a divorce. I've been through one. It's a tough time. Financially, it's very hard on you. The real big lesson, I guess, from that is it just might be easier to bury them rather than divorce them. Financially, I mean. Food for thought. This graph from CoreLogic shows the share of negative equity by state across the nation. Nationwide, only about 2% of all mortgages are in foreclosure. As you can see, in Wisconsin, there's only 3% of all mortgages that are underwater. You'd expect the highest concentrations of negative equity to be on the West Coast, where they're seeing the biggest price decline. But you have to remember, they also saw the biggest price appreciation. We did not appreciate as much as, say, the West or the Southern Eastern states. So which is why they're seeing less of it and we're seeing a more elevated level. But again, that elevated level is 3% at the height of the housing crisis in 2008, it was about 26% of all mortgages were underwater. So you can see it is a very stark contrast. Last but not least, this table shows the credit scores of mortgagees who are members of Credit Karma who had a mortgage in 2022. As you can see, the number of people who had mortgages in Wisconsin who are members of Credit Karma, the number of them is 609,000 approximately. And of those 609,000, the average credit score is 699. The median or the most occurring credit score is 719. So that really speaks to the overall health of not only the mortgage industry, but also the mortgagees of the people who have and are getting and are obtaining and have loans in our state. So again, great job, Wisconsin. Switching gears to home prices and affordability. So this graph shows the year-over-year change as of July of 2023. That's the most updated data that they have. And as you can see, Wisconsin in particular, we on average have appreciated by about 5 to 7%. So what does that mean in actual dollars? So if we've seen about a 5 to 7% increase, that means Wisconsin homeowners have seen a gain of about 12 to 14% at this quarter as compared to the same quarter of 2022. All right, so what does any of this mean to you? What it means is that the feds may or may not increase interest rates 2 more times by the end of the year, and they will definitely threaten to increase interest rates next year as well, because they don't want the market getting comfortable again and the market running away and taking off and inflation going back up. It also means that even if they don't raise interest rates, that the rates will stay about where they are for probably at least the first 6 months into 2024. Their target is to have it around, they'd like to see the mortgage rates between about 5.5%, but we're not going to see that any time soon. The good news is because they raised interest rates so quickly when they started, now they've made enough ground where they're just triangulating. They don't want to do too much, they don't want to do too little, but now they have the luxury of slowing down, pausing as they are now. So they're raising it less and they're raising it less often, which is a really good thing. So there is an end on the horizon. For buyers looking to finance and sellers looking to sell and then finance a new home, interest rates are still going to be elevated. Like I said, we're at 7.19%. So the biggest thing that you can do is either sit out the market, maintain your credit score, and or work on having a really strong loan to value ratio to really give you that cushion and minimize your the dollar amount of your payments. Investors, it's going to be really tough to find those deals that's going to yield the right profit margins for your risk profile and portfolio. The deals are out there. They're just not as easy to find and they're not as cheap to get anymore. Cash is still very much king. Let's take a look at what's going on right here in Southeast Wisconsin. So right now we're at about 41.7 days on market. I've mentioned in previous videos that about 40 days on market is strong, healthy, robust. Here we are. We're in a good spot. Now October is going to be an interesting month. It's going to be really telling. If this spikes up then, it could mean a bit of a cold real estate winter season, but it is normal for the days on market to climb to between 60 to 70 days in the winter because buyers and sellers both don't like to move in the winter. So what does this mean? Buyers, if you really want to buy a house, there's going to be less competition for you. So it's a good time to look. For sellers, there's going to be less buyers. Less buyers mean less demand, less showings, probably more price reductions. But on the flip side, because we have such low inventory, there's going to be other less sellers, which means you might stand out. So it's really a tricky situation. So it depends on what you're looking for, what your goals are, your time frames are. There's going to be a strategy that's going to be best optimal for you. If you want to talk with someone about that, give us a call. All right, let's switch gears to availability of credit and homes. Because the interest rates are so high right now, there isn't a lot of people that want to borrow money because it's more expensive. which means the lending industry is losing money. They have less profit margins because there's less demand. Because there's less profit margins, they're cutting the amount of products and the types of products that they have available. Jumbo loans, they're harder to find because a lot of banks or lenders are no longer dealing with them because they're not money makers. As you can see from this graph, this is the mortgage credit availability index. We are as low as we were back in the 2008 housing crisis, switching over to supply. As you can see from this graph, we have the lowest amount of supply available since 2003, which again shows that we are in a seller's market. However, it is a challenging seller's market because of the interest rates. But we are at all-time lows from a decade perspective of homes available, which is what is affecting affordability. When supply goes down, prices go up. Speaking of supply, right here in Southeast Wisconsin, as you can see, the availability of new homes coming for sale. We are in the third consecutive month of having the less or fewer numbers of homes for sale. So again, homes are becoming scarcer and scarcer, and we can expect this number to continue to decrease going into the winter season. I'd like to see it not, but the reality of it is it wouldn't surprise me if we did. Looking at supply from another angle, construction. So this is a historic graph of construction of single-family homes. As you can see, we are below the historic single-family home average. A lot of this has happened because after the housing crisis, a lot of builders were decimated and they're still recovering. And now with high interest rates, it doesn't make sense to build unless they are making a upper middle class to luxury home. Right here in Southeast Wisconsin, we speak to builders and they won't build for less than $300 to $350 a square foot. So that's pretty pricey considering the average cost per square foot in our area is about $250. So right now they're only building upper middle class to luxury homes. This is another graph or table from the Wisconsin Builders Association that shows the change from the second quarter of 2002 to second quarter of 2003. Again, as you can see, Kenosha and Walworth County are still woefully behind in getting those new building permits and getting those permits to start those constructions. Racine, they're picking back up, so nice job, guys. Hopefully we will see this pick up for us, but just know that the gestation period is anywhere from 8 to 12 months, and that's barring no supply or labor issues. So even if this graph started to turn around, we wouldn't see an influx of that supply for at least expect 12 months. Let's take a look at the stats that really do affect you personally. So where is the 30-year fixed mortgage rate? So as of September 21st, the week that the feds announced that they're going to keep rates the same, the 30-year fixed mortgage rate average is about 7.19%. Median price range of homes in Walworth County year to date as of August is $330,000. In Kenosha County, it's $230,000. Now, this particular graph, this is the sales to list ratio. If your home sells for more than what it's worth, it's going to be above 100,000. If it sells less, then it's going to be less. This is the average of what sold last month. And we are at 96.9%. This is good. This is healthy. I expect this to oscillate between about 95 to about 103%. We want to definitely watch this. This will drop over the holiday months. So expect this to probably dip back in the 92s, maybe even to 90s, depending on how cold the real estate winter is. It shouldn't be too bad because, again, supply is so low and people want homes. Demand is pent up, but we're definitely going to want to watch it. But I wouldn't be too surprised or shocked or worried when this does drop. It's going to be inevitable. All right, so whether you're a buyer, seller, investor in Southeast Wisconsin, what does all this mean? It means there's a lot of moving parts to the real estate market, not just on the national level, but on the local level as well. There's no one-size-fits-all strategy. It depends on your home, your situation, what's most important to you. So the best thing you can do is call someone like us in to help you get a price valuation of your home if you're looking to sell, and get a pricing strategy. If you're a buyer, really understanding how much and what you can afford, and then putting a strategy together to find the right property, really hone in on what you're looking for so that you don't miss out on an opportunity when it does arise. So there's our information. Definitely give us a call. I love questions. You can email me, you can give us a call, you can like us on Facebook, you can subscribe. And in the meantime, thanks for stopping by.